Well, the trade dispute between the U.S. and China spreading to real estate. U.S. property owners, both American and Chinese, are now feeling the effects of the economic staring contest between the two rivals. Joining me now is Marcus and Millichap CEO Hessam Nadji. Hessam, good to see you this morning. Thanks so much for joining us.
Good morning, Maria. Great to be on the program.
So China's Anbag company, now it's selling its entire U.S. portfolio of property, and that includes the Waldorf Astoria Hotel here in New York City. You know, we all talked about this acquisition when it first happened, that this Chinese company was acquiring the Waldorf Astoria, the place where heads of state stay, and on all of this, and then that changed people's plans in terms of staying there. They thought it was going to be tapped. What's your take on all of this, that Anbag is now selling that portfolio?
Well, you have to separate it from the overall market performance. Investor sentiment just in the last 6 months since the tax reform has really improved domestically, coming fresh off of investor symposiums and town halls all over the country, and even in Shanghai, London, and Toronto, where we've held these kind of interactions with the real estate investors. There is a lot of enthusiasm for investing in commercial real estate throughout the United States, as broadly speaking. This particular situation has to do with what's going on with Anbang itself more than a market issue, and we have to really be mindful of that. What's happening with this portfolio is that it is definitely garnering a lot of interest. It is trophy assets in a lot of interesting metros that have all kinds of positive drivers. But the timing is a little bit interesting in that when the acquisitions were made and the investments were made, the market was at a peak. We've seen a moderate slowing. Certainly prices have eased a bit, especially for luxury hotels. So it's not the ideal time to bring that type of property to market. But broadly speaking, commercial real estate investments are very positively viewed, not just in the U.S., but across the world.
Yeah, but I guess what I'm asking is, we've got this trade dispute going on with China. Are we and for a long time, the Chinese and the Russians were really boosting the real estate market in the U.S. They were buying all sorts of property at premium prices. Are we now seeing the Chinese slow down because of the dispute? And is that hurting real estate prices?
Maria, we're definitely seeing the slowdown. Chinese investment in commercial real estate peaked in 2006 at about 25% of the volume of capital that was coming into commercial real estate, down to about 8% this year. So there's a profound effect. But you have to remember, foreign investment into commercial real estate in the United States is a very small percentage of the overall marketplace, something like 12 to 15%. So it is not making a broad effect at all. I don't expect that it will. But from the standpoint of getting a lot of attention and the sentiment, it adds to a couple other concerns like rising interest rates, the fact that we're in a maturing cycle, and the questions as to how long can this expansion last, especially when it comes to the most important thing, and that's job growth. That particular indicator is very positive, as you know.
I'm Steve Forbes here. This sort of reminds me of what happened when Japan came in the market in a big way. Remember Pebble Beach and Rockefeller Center and all of that? A lot of those properties were sold at a huge loss. Are you going to see more and more, whatever reason, forced selling or whatever, Chinese and even Russians selling real estate in this economy?
I do see some similarities, Steve, but the magnitude of the Japanese investment was much larger. It was happening at a time when commercial real estate in the U.S. was a lot more volatile. If you recall, we would have lots of overbuilding, lots of overlending, loans would go bad, there would be oversupply, and that was basically coupled with Japan's very aggressive buying spree in the 80s and even the 90s. That is not at all the environment we're in now. Supply is much more disciplined. Leverage has been much more disciplined throughout this expansion cycle. And so the environment is much different. And I don't expect the magnitude of the downfall eventually when we do have a recession and so on to be anywhere near.
How great is this Chinese sell-off going to be? H&A is now supposedly going to sell a building ostensibly for national security reasons because it's near Trump Tower. Is there going to be more and more of this kind of forced selling, do you think?
There may be more at the large institutional type of ownership of commercial real estate held by Chinese entities. But you have to remember, again, private investors, both domestically and from whether it's Asia or Middle East or Europe, make up the bulk of the activity, of investment activity into commercial real estate here in the U.S. Private investors, live from our interactions with them, our clients, are still very interested in commercial real estate throughout the country, particularly in the gateway markets, and that interest has not abated. So there's a big dichotomy between these large, high-profile institutions and the bread and butter family money and individual investors.
Hessam, real quick before you go, any word on residential real estate in terms of, I know it's bifurcated different throughout the country, but what can you tell us about the residential real estate? Are prices coming down or up?
Actually, they continue to rise, Maria. There's a shortage of supply. Supply has been, much more disciplined in this cycle for housing as well, which is a positive in a way. But you're seeing some metros put up 10, 15% year-over-year pricing increases.
Wow.
That make us a little bit concerned about a potential bubble when the economy does eventually slow. And people are still preferring to rent. The rental market is still very, very strong.
All right, we'll leave it there. Hessam Nadji, good to see you as always. Thanks so much.
Thanks for having me on.
We'll see you soon.